Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 13th, 2022. And this, as I've circled and pointed to with an arrow, is the strongest bottom signal, the strongest and most clear indicator that the bottom is in for most cryptocurrency assets. We're also going to look at what that looks like in the stock market, what that looks like in various crypto assets on various charts, and why it's a great idea to get in if you haven't gotten in. And I'm also going to talk about what happened last night with some of my positions, unfortunately, but how, I'm still very, very, very well off, all in all, in preparation for this bull run. So if all that interests you, then stay tuned. Guys, please like, share, and subscribe if you're enjoying the content, and let's get into it. All right. This chart, of course, is the DXY, the US dollar currency index. And it is the market mover, not just for Bitcoin and cryptocurrency, but also for traditional stocks. And what happened this morning, maybe, is very interesting. Very, very interesting. So you can see that we've got a massive, I'm going to get rid of this circle and this arrow. We've got a massive rejection here. And we've had rejections in the past, but we've been waiting for this rejection from this region right here, given that we've been at that level for a few days. And we were kind of teetering and creating bearish divergence at this level. Okay, and this level is particularly interesting because if you zoom out on the for hourly or daily, you can see that this level is clearly it's a counter to this corrective move. Okay, again, you have initial corrections or initial breaks of structure, and then you always have a counter. Okay, so you always have a counter. You have a three-wave move here, and you get a three-wave move there. Okay, so this is going to likely produce a 3-3-5 or a flat correction. Okay, 3 waves down, 3 waves up, 5 waves down. Okay, so this right here, this big candle that you see, well, these two candles, namely this one, the candle of rejection on the 4-hourly, and then this one that continued the price down below this range right here, breaking this range. That candle especially is taking us into impulsive price action. Okay, that takes us into the 5 waves down. Okay, so let's just zoom out really quickly so you can see what I'm talking about if you guys are new to the channel. But essentially what I'm seeing here is a flat correction, and I'm gonna make it seen here. I'm just going to make this opaque. And so yeah, you can see that there's 3 waves down. You could say the 3 waves start from here or from there, it doesn't matter, but this is the orthodox high right here. This is the nominal high of this 3-wave move right here. A wave, 1, 2, 3, B wave, and then what you got here was a consolidation reversal pattern that finally played out, and it looks as if, because we broke this range right here, because we broke this range right here, and we broke this level, right? We wicked beyond this level, but we're retesting it and then likely going to continue. Then this is exactly what we've been waiting for. These are the 5 waves that we're expecting down. Okay, obviously, I don't know if it's going to stop at this ascending support level, but it can very well break down and continue below that. Okay, you can find support here, intra wave support. It doesn't necessarily need to be the end of the trend. And actually, you know what? We can measure this quite simply and easily, because we know the length of most C waves or most impulses of flat corrections. Are they have the length of the 1 to 1236 Fibonacci extension of wave A and the retracement of wave B. And we're going to take that nominal high of wave B. So basically, what I'm saying is that you can measure between 1 and 1236 of A, retracement of B, and that's likely to give you your destination or your distance of C. So C should end up around here. So I think that this projection is accurate, okay? Obviously, it's not a crystal ball. Don't know what's going to happen. It's just a projection based off lots of data, lots of mathematical proportions, and sort of trends that we see in Elliott wave theory. So that's what I'm seeing. And this is so important. Like, this is a Bitcoin channel. This is crypto. I make my money by trading, speculating cryptocurrency. Why am I looking at the US dollar currency index? Of course, because it's the underlying asset. If you look at a chart of the US dollar currency index and Bitcoin over many years, you'll see that they're almost perfectly inversely correlated, okay? So one part of my analysis is very simply to look and see when the US dollar currency index is going down. That will tell me when Bitcoin is going up and vice versa, okay? And then also, let me just double check something. Okay, yeah, good. Also, very important thing is, this is impulsive price action here, right? Because we know every flat correction is a 335, okay? And this 5-wave sequence is impulsive. Whether we're going up or down, I think this is interesting because this will tell you when Bitcoin and crypto is impulsive as well. This will tell you when the stock market is impulsive, okay? You don't want to trade corrective price action. I know people do it all the time, but, corrective price action is, capricious. It's irregular. It's difficult to project. It's the impulsive price action that moves quickly, that moves impulsively, that moves, a lot in either direction. This is where you can make money relatively safely. And so I think that Bitcoin and crypto is also impulsive now, given what I'm seeing on the US dollar currency index chart. Guys, if you're getting value, please like, share, and subscribe. All right, so that's enough with the US dollar currency index. Lastly, before we leave, we're just going to have a look at our indicators. Let's turn on our stochastic RSI. Let's start with the monthly. So highest time frame, we can see this has been overbought for quite some time, for many, many months, but now it's finally crossing bearish, okay, in overbought territory. On the weekly time frame, you cross bearish in overbought territory. You've got some strong bearish candles with, strong wicks to the top, okay, here on the weekly time frame. Daily time frame, you're also cross bearish. You're cross bearish. You're not in overbought territory, but you're cross bearish. Okay. And the 4-hourly time frame, you're still cross bearish because you haven't closed yet, right? If you wanted to see a move up, you would have to see these close, these K and D lines close. Okay, so it's looking good for a move up in Bitcoin, crypto, and in equity stocks and stuff like that. All right, let's have a quick look at the stock market. Okay, so that's my main bottom indicator. Also, the analysis isn't, strictly relegated to just one aspect, okay? It's like a multi-dimensional, sort of multifaceted analysis. And what I just said about Bitcoin and crypto and stocks being impulsive price action, I want you to keep that in mind when you look at this chart, okay? Look at this. What do you think that is? If you just look at the S&P on the 4-hourly time frame, you could see for about a year out, right? So this is 2022. This is 2023. You can see quite far in this kind of in this scope, right? Where else have you seen this kind of price action? Like a bar, a candle, such strong impulsive price action. You can't see it anywhere else on this chart. That's telling you the character of the market has changed. Do you see that? I mean, prove it to yourselves. Just look at it. Look at this price action. Look at this candle. Look at the strength and the continuity of this candle, right? You can look far and wide over the course of many months and you will not see any such candle. The S&P is already in impulsive price action, okay? And actually what you got here is 2 degrees of AB basing. You have your A wave here, your B wave there. That's your big A, that's your big B. You have your small a and your small b right there. Those are your 2 degrees of AB basing. I was under the impression before that you were going to get a composed B wave, but this is it. This is small b. This is the impulsive price action. If I was trading stocks, okay, I would be long. I would close my eyes and long the S&P until we hit this resistance right here. Okay, so that's my take on the S&P. It goes into what you see in the US dollar currency index, because also not just being the underlying asset for stocks, but the dollar's also magically, surprisingly, not surprisingly, I'm being facetious, obviously it's the underlying asset for stocks as well. So if the dollar is tanking, if the dollar is impulsive to the downside, you're going to see stocks impulsive to the upside. Okay, so that was a quick look at the S&P 500, which we use as an analog for stocks on this channel. Okay, let's have now a look at crypto, because this is a crypto channel, and I'm gonna start on the small time frame because I just want to show you something. I want to show you 2 things. One, this is what you call bullish engulfing price action, okay? So you had a bearish move down here, okay? You came and you left this level of 19, and you just broke it last night, okay? And that volatility to the downside actually stopped me out on a few positions, all right? Now, at the time, I was like, fuck, I hate getting stopped out, right? And I haven't taken a loss in a long time, right? Because it's been the bottom of the bear. I've just been accumulating, trying to be safe, play defense, maintain my margins. It was just too much volatility. I couldn't handle it. I couldn't get enough into my margins fast enough to defend them, okay? And, and I'll talk about it a little more later, but there's certain positions that I overestimated or underestimated. I underestimated the downside potential without completely breaking support and making a fresh lower low. What am I trying to say? I can show it to you better, but essentially, right, you're in a range and you're consolidating. If you wick down a little bit, it's okay, but that doesn't necessarily mean you're breaking down. You could just wick down below your range lows. That's fine. A lot of assets did that, and the wick down, as long as it's within 1.618 or the phi ratio of that preceding A wave, it's okay. I know that, but I wasn't careful enough with some of my positions, my stops. And so I got stopped out for some positions, unfortunately. But, that's part of the game. By and large, most of my positions are still viable. They're still going. And that's kind of the math you play, right? If you're trading on leverage, I'm saying, okay? I'm not talking about my spot positions. I'm obviously talking about my leverage margin positions. And you'll take a certain number of trades or whatever, and you win some, you lose some. The name of the game is just to win a lot more than you lose, okay? In terms of income, or sorry, in terms of ROI. You want to put some money in, but get a lot more money back, obviously, right? So I'll write that off as a a loss to the tax person, to the tax man, and keep it moving. So that happened. That volatility was, I think, another bottom signal. Okay, because as always, when you see assets go and break bottoms but not continue and then go back up, that's usually kind of testing any last supply remaining, right? Any liquidity below that trading range. And that's a lot of what we saw. And one of the biggest examples of that was in Cardano. I've really underestimated how much liquidity was under our trading range. And I got stopped out of one, but I got right back in, and I'm in a really nice position in Cardano right now on that exchange that I was using. So anyway, what I'm trying to say is, yesterday was volatile, but that's another reason it's likely that we're now impulsive we're impulsive again. We haven't been impulsive in quite some time, okay? All of the, and let me zoom out to explain this, and I'm going to zoom back in to illustrate what I was wanting to illustrate, but this 100 or so days of consolidation reversal, there's nothing impulsive about that, okay? Everybody understands impulsive price action is either up or down. It's not sideways, okay? So that's the impulsive price action. The last impulsive price action we've had in Bitcoin was in June, okay? And then ever since mid-June, it's been sideways. This is now the new impulse to the top, or impulse, positive price action, impulse, right? It is very, very clear that you're moving differently. You're going to see it in the volume soon. Maybe it hasn't shown up yet in the volume because we haven't been in this impulse long enough. But you're going to see it in the volume soon. You're going to see large bars akin to what you saw on the way down. You're going to see very large volume bars. Okay, that's going to confirm it. Obviously, you're going to see the moves that we were talking about before, breaking this trading range to the upside, retesting it, and then continuing. You're going to see quick moves, okay? And on a small time frame, you're already seeing that, okay? So now let's go back into the smaller time frame so I could show you this. There is nothing corrective about this price action right here, okay? So I'm on the 15-minute time frame. I understand that this is a small time frame, but I just want to show you the character of the waves, the character of the price action. This is an impulsive Elliott wave without, very important, without an AB base. There is no AB base on the bottom of this, right? Because remember, every corrective move starts correctively but ends impulsively. So you could say, oh, I see some impulsive price action. No. That's not fully impulsive. When you want fully impulsive price action, you do not want this AB base. Here, it's finished. You've got this capitulative volume candle. It's finished. You got your capitulative volume candle, and then you're in full impulse. The full impulse in Bitcoin, in my estimation, given what we saw in the US dollar index, given what we saw in the S&P, right? Not this to say that the S&P is affecting Bitcoin. US dollar currency index is affecting both. It's just that you can see what the US dollar currency index is doing, in other words, through looking at the S&P and also through looking at Bitcoin. This is the start of the bull run right here. At 8:30 a.m. on Thursday, October 22nd. That's the start of the bull run. That's perfectly impulsive price action. And another way you can know that this is perfectly impulsive price action is once it reaches resistance, it just hangs out and then keeps going. Hangs out, keeps going. If it rejects very in a controlled manner. So what you're going to see from now on is the green is going to outdo the red. It's going to be, by and large, going up and then correcting down a little bit, but then going up more, okay? And it's going to be hard to measure because even though we have our ratios, like, you know, wave 3 is 1.618 to 2 Fibonacci extension of wave 1, retracement of wave 2, expect extensions left and right. Expect ending diagonals. Expect ending diagonals in wave 3. Like, don't try to complicate things. And one of the things I'm doing, because I still want to make 1 or 2 more entries, given that I was stopped out last night out of some positions, and you can probably tell which positions I was stopped out of because they're no longer on my watch list. If it's not on the watch list anymore, then I'm no longer exposed to it. Okay, so you guys can kind of figure out what it was that I lost in terms of positioning. But this is part of it. You have to learn to lose. If you don't know how to lose, it's very hard to be successful trading. It sucks. I hate it. I've always hated it, no matter how small the loss. But you have to learn how to lose. You have to sometimes take losses strategically. You know, it's all part of trading. But anyway, what I'm going to do to make my entries is simply take my Fibonacci retracement tool, and I'm going to make sure wherever I enter in these impulsives to the upside, that my stop is below the 0.618 of whatever action was done. Do you guys understand that? Basically, if we are indeed in positive price action, impulsive price action, the reason I'm doing that is that whatever the retracement is, even if it's the harshest, most sharp wave 2 retracement, it cannot break the 0.618 of the preceding impulse. Do you understand? So let's say, I don't know what this is. Maybe this is 5 waves already. Maybe it's gonna continue in an extension. I don't know. Okay, but that's part of it. You don't want to act like you know. Know that you don't know. That's power. Know that you don't know. That is power. I've been that analyst that's like, oh yeah, I know exactly. I'm gonna measure this, and it's like that's 5 waves, boom, and it's extended, or you know, whatever. Just know that you don't know. So this is like a safe way to enter. You measure the entire wave sequence. You know, you can assume that you can look for bearish divergences and try to do that. But again, you're going to be sometimes bearishly divergent in these ending diagonals, but it's still going to continue going up. So all you want to do is you measure it, and you measure the 0.6185 ratio, and you hide your stops below that. And that's it. And then have fun. That's it. That's exactly what I'm going to do. I want to take, high leverage positions in Dogecoin and in Litecoin, which I will do on the platform, on the trading exchange that I got. I got destroyed in last night. I'm just gonna be honest with you. I got just destroyed on that exchange, and for some reason, that's the exchange where I'm more aggressive. In the other exchange, I'm a lot more conservative. I was fine. I didn't lose anything, but yeah, you win some, you lose some. But even as aggressive as I am in that trading exchange, even with all the losses that I've incurred so far, if I just win one, I'll make it all back at the same rate, or if not faster than the exchange where I'm a lot more conservative. You see what I mean? So it's just there's no good or bad. It's part of the game, you know. If you take aggressive, high leveraged trades, you know, sometimes if you're off a bit, you get hit. Okay, so that's what I'm gonna do, and that's sort of the idea of this being impulsive. You're gonna see a lot of volume. But again, don't assume that you know when it's going to stop. The fact that we're in a bull market, the fact that it's up only price action. This is what I call up only price action. Assume that we're going up, and we may stop briefly and consolidate, but by and large, assume that we're going to go up. So, it's tricky to get in and make positions, take positions in bull markets, but there's an art to it. And I think this is the easiest way and the safest way. It's not 100%, not financial advice, but I've never had any issues making entries in a bull market using that. Just take the length of it, hide your stops, your liquidation points beyond the 0.618, because remember, wave 4, even in a leading diagonal, only retraces to the 618. Wave 2 only retraces to the 618. If we're indeed in impulsive price action, that 618, that phi ratio is going to be respected, okay? So what I'm going to do now is I'm just going to pause briefly, check, no comments, no questions. Let's keep going. Let's go down the line. So Cardano, as I was saying before, this took me by surprise. I did not know we were going to make such lows, right? But yeah, it happened. All right, I'm gonna actually do one thing. Give me 1 second. I'm gonna do one thing here real quick. Here we go. Okay. So yeah, Cardano is exactly what I was talking about, okay? You had this, you did not break, you broke support, but it's not a break of support beyond what would break this level. The level's not broken. I know this is a little complicated and it's nuanced, but for some reason, every time I was looking at this chart, I'm like, no, there's no way this is breaking right here. And so I wasn't careful enough to withstand a wick below. And you're going to see this throughout. We're going to look at other assets. Of course, Bitcoin didn't do that. Okay? Bitcoin held its structural integrity, but that doesn't necessarily mean that these other assets haven't also held that structural integrity per se. Like technically, they broke through, but technically it is not, you're not leaving these levels, okay? And so technically all you would do to measure that, like I said earlier, is you want to take the phi ratio of the preceding A wave, which would be here. So this is the A wave to this B wave. So if you measure that right here from bottom, to top. If you wanted to be safe, you would hide beyond the phi ratio right here. And, I wasn't able to do that. So, alas, it's fine. It's a difficult lesson, but it was a lesson nonetheless. So yeah, you have this 150 plus range. You wick below. You got some liquidity, and actually your response, as you can see, is a V-shaped recovery with massive volume. So look at that. Look at the volume on this. That's what you want to see for a recovery, basically saying it's over. Whatever correction, it's over. This is all impulse right now. Okay? And a lot of people I know are not going to see that. They're not going to appreciate it, and that's fine. They'll figure it out when it's up here somewhere. But that's what I'm seeing, and the volume showing it. I mean, the characteristics are showing it, not just in the U.S. Currency index, but also in other assets throughout the crypto market. I mean, they're behaving like the bull run started in earnest today, October 13th. Okay, let's look at polka dot. And you can see some wicking below. Again, this isn't uncommon. Okay, this is not something that you never see. This is actually quite common. You wick below your range. Yeah, you wick a little bit below your range, and yeah, you're still okay. It's common actually in a large range, in a range that you've been in, to wick below to test for liquidity before a move up. And in Wyckoff theory, they call that a spring. Okay, so you can see that in Polkadot, in Ethereum. You can see that right here. You kind of wick below this range in a spring level, in a spring fashion. Okay, you can see that in RSR. But in RSR, it's pretty much, this was the control, or this was kind of like your mean, you know, your point of control, your where most assets were bought and sold. Like, this is like the mean, right? And you wick below it, and then now you're back above it. Synthetics really responded bullishly, really bullishly. But you can see that it held this level for quite some time, wick below, and recovered it. And the break up and out, the breakthrough is going to be something else, okay? VRA, same thing. You can see it throughout the market, guys. Exactly what I've been showing. It's very consistent here. You wick below and you recovered it. You wick below and you recovered it. And the really bullish thing is that you didn't reject. You're kind of hovering at resistance. That's super bullish. Same thing with Litecoin. You're kind of hovering right here. XRP had already kind of done its move up towards the top of this range, and it put in a regular flat correction. So it's just continuing. XRP's simply just continuing its impulse to the upside. Dogecoin, same thing, right? Right here. Dodo, same thing. You wick below. Wick below, recovered it. That's a V-shaped recovery. And it's not that you didn't do your A/B basing. All your A/B basing was done here. It's just that was the end of the A/B basing, and the A/B basing took you to wick below your trading range, or the range that you had been in, and now you're back above. Okay, so that's pretty much it. If there are no other questions, we're gonna call it a stream. Young Dasa says, check out how Zcash reacted as well towards the same situation with ADA. So let's check out Zcash. Zcash. Which one do I want? This? No, not that one. This one. Yeah, it's not bearish, but it's annoying if you're in leveraged positions, right? Because, like, unless you are really careful, that's easy to get stopped out, you know? I would say, yeah, Zcash, not so much, Young Dasa. Zcash was relatively mild. Like, ADA really aggressively tested the bottom of that range you see right here. And actually, this is a good thing for ADA bulls for the the bull market, because actually if you measure the 5 waves up and the 3 waves down for ADA, you can see that this decisively breaks the 382. So it's likely that you're going to put in a good wave 3, okay? And so that basically makes this retracement deep enough for this to be likely a wave 3. So a really nice strong bull run. And Zcash, that you definitely dipped under the range, but not as much, right? You dipped under for sure, absolutely, right? You created this AB base right here, and you tested liquidity right below it. But I mean, in Cardano, I mean, you really tested, the phi ratio, right? And the phi ratio here would simply be, actually, let's see, that would be, yeah, it wasn't really tested, to be honest, with Zcash, because you could have gone a lot further down, right? Because if you took your previous A wave, which would be your second degree A wave, you could have come all the way in this region, right? You didn't even hit your 1, 2, 3, 6 in Zcash. That's a tricky bit. It's a tricky bit of trading. But if you're in spot, it doesn't matter. You did a V-shaped move, and it took just a few hours. It's painless. Zcash held its ground. There's certain things that held their ground quite well. Zcash, Bitcoin. Oh yeah, there's another thing I want to talk about. Okay, yeah, we'll talk about that in just a second. So Zcash, Bitcoin, Litecoin held up pretty well. XRP held up decently well, but it just put in so much positive price action in the past. Literally, this is like the best day. Not financial advice. This is the best day to go long, because all the drama has already happened. All the drama's already happened, and it's quite clear. The charts are quite clear what to do. So I'm gonna do a little bit of trading right after the stream. But this is the best day to go long, in my estimation. Very, very, very clearly, because the next moves are going to be massive. They're going to be massive. Here, let me just do this one thing real quick. Okay. Okay. The other thing I want to talk about is, and this is the last thing I'm going to discuss. Let's look at, here, hold up. Yeah, Young Das, I wouldn't be surprised if, just look at these assets. I wouldn't be surprised if in a few hours we just got a massive pump, and you saw 50, 60, 70% pumps left and right? Synthetics is one of the early movers. You're just going to see, because we're breaking resistances, everything's at resistance right now. See, you did a V-shaped recovery, broke support, and now you're back up at that support level, okay? Maybe you consolidate a little more, but once you break, it's going to be massive. Expect massive moves like that, okay? Throughout the market. That's why I think it's a great time to get exposed long. The other thing I wanted to say is, oh yeah, sorry, I forgot what I wanted to say. Yeah, I want to look at Bitcoin dominance, because that's also telling us a story. So Bitcoin dominance, if you guys recall, I said was likely, let's go on the weekly time frame. I said Bitcoin dominance was likely to come back up to these levels right here before rejecting down. And we might still, but you can see Bitcoin dominance is starting to go in a major way. Okay? On the weekly time frame, we're cross bullish. On the daily time frame, we're cross bullish. And interestingly enough, we put in this move right here. So 5 waves up, we put in an ABC, composed flat correction, just a run-in-the-mill flat correction. And this looks like some sort of impulsive move to the upside. And now wave 2, and you can see you're going in for wave 3. I think Bitcoin dominance is about to pop, okay? And Bitcoin dominance popping really shows that now Bitcoin's going to start running. And that's really when most people consider the bull market to start. And you can see that Bitcoin dominance is now at a crucial resistance, right? You can see it's kind of like a head and shoulders, an inverse head and shoulders. And that is typically a bullish pattern and confirmed once you break the neckline. So a break of that neckline, I mean, people are really going to know it's time to trade. It's time for the bull market. But now is the time you want to get in before you break these necklines, before you break these resistances. It's the best time to get in because it's really hard to chase those green candles when they start running. So that's what I wanted to say about Bitcoin dominance. Yeah, Young Dasa, that's what I started the video talking about. Young Dasa said, did you also see the DXY dump? Yeah, that was the first thing we looked at because this is the market mover. Absolutely. That's what gives me confidence to, put 5 figures in the market and hope for it to appreciate. It's because I'm looking at the dollar index and seeing it be bearish, and I'm seeing it deal with resistance, and I'm seeing a move down. So yeah, absolutely. So yeah, that's it, guys. I hope that you're having a great Thursday. Yesterday was tough. Lots of volatility. Volatility means quick price action up or down, and that can confuse people, stop people out. But I hope you're still in your positions. You're still positioned to take advantage of this coming bull market that I think has started in earnest for Bitcoin today, October 13th. That's it for me. I will see you guys tomorrow for the live stream. Take care and trade safe. Bye.